The Sam Laprade Show continues on CityNews.
101.1 FM and 1310 AM.
Well, anybody with a variable mortgage was certainly holding their breath today. And we know that the Bank of Canada made an announcement a little bit earlier, just after 10 o'clock today, that key interest rate has increased by 25 basis points. On days that the Bank of Canada make an announcement are the days I call on Clinton Wilkins to get all of his wisdom. Hello, Clinton.
Hi, Sam. How are you? Happy New Year.
Happy New Year to you. Clinton, of course, is from Centrum Home Lenders Limited. Clinton, these are the dates we have on our calendar. We know something's coming. We were kind of hoping that they were going to pause, but today was 25 basis points. Not really a surprise, though, Clinton.
I think it certainly wasn't a surprise. We had a Twitter poll up on my Twitter and on Instagram, and even just the general public, everybody was assuming that there was going to be a 25 basis point increase. I think it's kind of widely accepted, and I think economists are really predicting that we may be basically at the top and now things are going to plateau. I think it'll be really interesting to see what's going to happen with inflation. As you know, in December, inflation has come down a little bit. I think at the peak it was somewhere around 8.1% or 8% during the peak, and now we're down in that 6% range in terms of inflation. But inflation still has to come down more before the Bank of Canada will even consider, stimulating the economy again and bringing these rates down. Really what we think, these rates are likely going to be high, for the next year or so while they're really trying to battle inflation.
Can we talk about fixed rate mortgages and variable rate mortgages? So just basically mortgage 101, if you will. Let's talk a little bit about why somebody chooses one over another.
Well, right now, Sam, a fixed rate is lower than a variable rate. So some consumers are choosing a fixed rate just for the sole reason that it's going to be lower today. Will it be lower over the next 5-year period of time? Likely no. We think that some of the fixed rates are near, the top of where they may be. The good news is on the fixed rate front, over the last even couple of weeks, they've started to soften a little bit. So there are some better fixed rates out there. I think the question that a consumer really needs to ask themselves, and everybody's situation is different, Sam, what is your risk tolerance? Do we think that the rates are going to be as high in 12 months' time? I think over the next year, maybe 2 years, in some cases a fixed rate may be lower, but historically variable will be lower than the fixed. We've seen increases over the last 9 or 10 months, Sam, but in the past several years, variable has been lower. So I think that if you're in a variable rate mortgage and you're early in your term, I would stay the course. If you have 1 year left, I think likely it still would make sense to stay the course because the shorter term fixed are still very, very high. So for an example, if a consumer was going to do a high ratio insured purchase today, you can get a 5-year fixed under 5%. So we're talking, mid-high 4% range. The same product today in a variable is 5.7% plus. So as you can see, it's about 1% more to take a variable today versus a fixed. But what will those numbers look like in another 12 or 24 months? And I think that's what you really need to think about. Another thing that's really important, and many Canadians don't think about this when they're going to get a mortgage, is are you going to break your mortgage early? Right. And a lot of things change in people's lives from, maybe change of employment or loss of employment, matrimonial breakdown, health issues. There's a lot of reasons why consumers break their mortgage early. And the one big pro with the variable is if you break it early, it's only 3 months interest. And I think the other thing that you need to think about, when and if the fixed rates continue coming down, you can always convert your variable rate mortgage into a fixed. In my opinion, I think there's still a strong case for many borrowers to take a variable. The one thing that we do need to take into consideration is with every mortgage that we do, it has to go through a stress test. So we're qualifying people at 2% above whatever their contract rate is. And in some cases, people have to take a fixed rate because the rate is lower just to qualify.
Right. Well, as you know, Clinton, I just purchased a new home a couple of years ago that was being built. So I went through this process in 2022. And, as a single mom that's self-employed, By the time we got to the end of the stress test, I was asking where I needed to make my blood donation because it really felt like, they really did, ensure that I could handle this mortgage because, and I think I'm joking about it obviously, but at the end of the day, I'm grateful for it because I don't want to get in. I never would want anyone to get into a situation, including myself, of course, that in the long term wasn't going to work for my family. So those stress tests, although when you're going through them, they're not so fun, Clinton. But at the end of the day, it ends up being a good thing.
It's protecting you, and it's protecting the Canadian banking system. And, there's arguments about, having open markets and all these things, but I think sometimes consumers need to be protected against themselves. My big concern, I think, is for existing homeowners, Sam. People that are coming up for renewal this year, for us, we have hundreds of consumers that are coming up for renewal we did mortgages back in 2018, and they have rates in the 3% range. So those consumers are going to be renewing into much higher interest rates, and I think that's a big conversation. And we're certainly having the conversation every day with consumers. A lot of people are choosing to take a longer amortization for the reason that the rates are quite high now, but also everything else that's going on with inflation. We know consumer goods are more expensive than they were.
Mm-hmm. And I know some people, their mortgage has gone up by $800, $1,000 a month. It's almost like an additional mortgage payment, Clinton. I mean, this isn't small money.
And I think we have to be very cognizant of that. Not everyone is having a great time. A lot of people are starting to feel the cracks of what's happening with inflation, with higher interest rates. And I think that's what we need to be cognizant of. And I would really urge anyone that, might be starting to feel this pinch, start having the conversation. Talk to your unbiased mortgage professional. Are you in the right product? Are there any changes that you should make to protect your financial, future? And, I think for us, everyone in our office, we're certainly having those conversations with customers every day. And I think we need to put, that cap on that not everything is rainbows and unicorns. And I think the next 12 months are going to be tough for a lot of people. And, we're talking about rates right now, Sam, and we're talking about inflation. But what happens in another 3, 6, 9, 12 months when we're starting to talk about people losing their jobs, right? So these are going to be certainly conversations that we're going to be having.
Ooh, holding my breath again, Clinton. It's definitely going to be an interesting 2023, and we know that these changes that the Bank of Canada are making are hard to hear, but as we head towards that word recession, it makes people very, very nervous. You're always so grateful to share all this information. I think as well, Clinton, about somebody today that's thinking, will I ever be able to buy a house? What advice would you have for them?
I think it's really about, sometimes cash is king. I think having savings is very, very important. I think obviously income is a big piece. And I think monitoring your credit, monitoring the credit going forward. Download Borrowwell, download Credit Karma. They're free credit monitoring apps, and you can really keep a very close eye on that. The one piece of solace I will, tell our listeners, with this 25 basis point increase that the Bank of Canada announced today, we may be at the top. And I think that anytime things plateau, it's a lot easier to plan and make decisions. I think the uncertainty is very challenging for folks. So, we're certainly going to be back with you. The Bank of Canada is meeting again in March, and we'll be back with you, and we'll certainly report on the news. And I'll bring my perspective. I know not everyone talks about mortgage lending every day. Luckily, I get to do that and share my thoughts and opinions and the news.
I appreciate very much Clinton Wilkins joining us today from Centum Home Lenders Limited. We'll speak again in March, if not before that. Clinton, thank you.
Thanks, Sam. Have a great day.
Appreciate Clinton's perspective today. And that 25 basis points was, as Clinton mentioned, not unexpected. Some people were hoping that maybe it was going to stay the course and not see any increase. Some people were predicting, some economists were predicting 50 basis points. So we sort of met there in the middle, and it's 25 basis points for that interest rate hike today. When we come back, Michael Spratt is going to be here. He's an Ottawa criminal defense lawyer. He's going to be talking about the Freedom Convoy trial for Randy Hillier. It's a really interesting story. You will not want to go anywhere. Stay with us on City News.
Sam Laprade will be right back on City News.
101.1 FM and 1310 AM.